Welcome to the pilot episode of Heartland Market Talk on Open Range. Well, we're just going to give you an idea of what we're going to start doing during these shows, and that is to kind of have a format that we follow. In the first part of the show, we're going to talk about the headlines that are driving the market either today or can have an impact on the markets in the coming days. That's important to know, especially when there's something like the Federal Reserve is meeting or a crop report coming up. It's important to know these things ahead of time and so you can plan for them. Then we're going to move into and transition to what we call Heartland Insight. With today's trading so driven now by AI, which is mostly price formats, price charts that are being followed closely and driven by AI, it's important for the audience to know what is the trend of the session, so to speak, for the week or the next coming weeks, so you can get an idea of what to expect and what's happening in the marketplace. Then we're going to roll into a section that's more audience participation. It's Ask the Question segment. And there's many questions that clients have, we've noticed, but they're too embarrassed to ask. And so we're going to give you an opportunity to email questions in about general ideas in the markets. Don't be embarrassed. We're not going to use your name. Don't worry about it. We'll just use the question to talk about and create a learning portion of the show. So without any further ado, let's get started. Headlines that are actually affecting the market a lot, but you're not seeing it here today in the United States. The legacy markets are not carrying it, and that is over in Europe. The farmers are protesting the penalties that are being applied to them because of so-called climate change. The climate change, whether you believe it or not, is being forced upon farmers to reduce carbon emissions and methane gas, farting from cows, or eliminating their cow herds. And so we're seeing farmers throughout Europe, whether it's Spain, France, or Poland, these areas are seeing their reduction of ability to produce being hampered. And so what they should be doing is dragging their manure spreaders into the airport fields where these private jets come and go for Davos and lay manure down there and slow some of this jet usage down, where that's a large carbon footprint for just one person to be releasing. Also, things that are affecting the marketplace, Evergrande, the largest real estate group in China, filing for bankruptcy, well over $200 billion. And that drove the commodity markets lower early this week as fear that Chinese demand for domestic raw materials and purchasing for imports are staying reduced as they have been last year, creating that downtrend we've seen in our commodity prices, and that there's fear going forward they may not picking up unless they see interest rate cuts over there to pick up their economy. Also important is the Federal Reserve. They're meeting today through the 31st of January. They will be announcing at 1 o'clock on the 31st what their interest rate expectations are. Many right now believe it's going to be no change in anything, but it's the communique that takes place afterwards that is the concern. Will we have 3 interest rate cuts or not this year, which seems to be the consensus building for that scenario. Also, energy pricing. As you've noticed, the gas pump prices have been rather inexpensive as of late. Well, that changes as we move forward, especially as we go towards the summertime, because the Northern Hemisphere uses more energy during any year, any time of the year versus the Southern Hemisphere. In the South, you have Argentina, population of Texas, you've got Africa. I'll move on. There isn't much energy usage there. And as far as South America is concerned, Argentina, Brazil are the biggest users, but there too, not enough to offset when the Northern Hemisphere falls away from the sun in the wintertime. So now moving on to Heartland Insights, we're going to take a look at some charts. The first chart we're going to take a look at today is a spot corn daily continuation chart. This affects the cash market. As you can see, back in the beginning of 2022, the market was very comfortable trading up north of the $6 range. We were very close to $7, peaking finally in April, and we started this long descent that bottomed out in October when the market started going sideways until our final end of the year spill, which basically we're trying to find some kind of low in this $4.40 range, which kind of lines up with, if you look at 2015 through 2020, the top side of those years was the $4.40 range. Well, there's an old saying in trading, once you go through resistance, former resistance becomes your new support. So this implies that we've went through 450 and we've came back down to this 440 range where there's a possibility we're going to find some value here for a bounce going into the spring. Typically our exports pick up in February and going into March and April. That could maybe bring about a rally. Wheat prices also, after peaking back during the Ukrainian invasion back in 2022, near all-time highs, near $14, it was a large, fast decline that's taken place into this year. We had peaked back in the summertime through much of the first and second quarter. $9 was the Kansas City wheat pricing chart highs, and then wheat tumbled hard into the end of the year, losing $3 a bushel on aggressive Russian exports from a large crop over there last year. And of course now, just like corn, we try to find a winter low and a spring rally. Wheat is notorious for rallying from the wintertime into April. We'll see if we can't do it again this year. Gold prices, well, with the Federal Reserve meeting, it's been interesting how for several years now, the 2020 through 24, we just can't seem to run through that 2,100 value on gold, especially when you consider how much debt we've added to the deficit over the last 3 or 4 years. You'd think we'd be moving higher, but we have not. And the dollar also had peaked over a year ago and has just pretty much stabilized at the last 5 years worth of value. That's because other world countries have caught on to our ways of inventing money. And so our dollar has not been falling off as fast as you would think as of late, because we're just the, what should we say, the cleanest shirt in the dirty laundry basket for right now. Now, crude oil prices, they did bottom last year in the summer, peaked during the invasion of Hamas into Israel back on October 7th. And since, we've still fallen back off as the economy out of China has not been pulling energy, and they're not too optimistic on our usage for energy this year so far. But it is December, January. We would expect energy prices to start advancing into the spring as they do every year. For today's question of the day, we get asked, what is the difference between the stock market and the commodity markets? While the volatility can still be the same, the difference is in the ownership. When it comes to stocks, you usually pay for the stock. You can buy it on margin, 50% down, but most of the time, most people pay for it. But when it comes to commodities, you only have to put 10% down because you're buying it on what we call the margin. So for example, if corn's trading at $5 a bushel, and it's a 5,000 bushel contract, it would have a $25,000 value. Yet you only have to put up $2,500 to own that corn contract. So if corn goes up 20 cents, you make $1,000. If it goes down 20 cents, you lose $1,000. So your percentage of return on investment is much more accelerated and magnified. We hope you've enjoyed today's episode of Heartland Market Talk. And don't forget, until you see us next time, there's many resources you can use at our website. Go to heartlandinvest.com, where you can see opportunities to see our daily podcasting. You can also subscribe to our newsletter at heartlandinvest.com, where we have morning information released via phone text and afternoon recaps. Also, Heartland Diversified Crop Insurance Agency, where we help farmers with LRPs and with the upcoming federal revenue crop insurance, which becomes very important as we go forward in this time of the year. So again, heartlandinvest.com, where you have a plethora of information for you to take advantage of. Thanks for watching.